Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what the big companies are up to. And today it looks like Bally's Corporation has some new numbers to share. Let's see if it's party time or time to hit the casino floor. Before we dive in, if you want to stay ahead of the financial curve and understand what these corporate documents actually mean for the companies you care about, make sure you hit that subscribe button. And hey, we've got a fantastic community brewing over on Discord where you can chat about these filings and much more. The link is in the description below. Bally's Corporation is back with a current report on Form 8K, and the earliest event they're reporting happened on August 11th, 2025. This is basically an announcement that they've released their financial results for the second quarter, which ended on June 30th of 2025. Now, Bally's is a pretty well-known name in the entertainment and gaming world, especially with their casinos and resorts. Their stock trades on the New York Stock Exchange under the ticker symbol Bally. So when they put out these financial reports, it's always a good idea to pay attention. The main news here is that Bally's published a press release on August 11th to talk about how they did in the second quarter of 2025. This press release is the heart of this filing and it's being included as an exhibit. What this means is that the company is sharing its performance for that recent 3-month period. Think of it like checking your score after playing a few rounds at the casino. They're telling us how much money they brought in, how much they spent, and ultimately if they made a profit or a loss. Now let's get into what those results might look like. While this filing itself doesn't contain the detailed financial tables, it points us directly to the press release where those juicy numbers are. Unfortunately, we don't have the actual press release content here to dissect the numbers in detail, but the purpose of this filing is purely to announce those results. To truly understand Bally's financial health, we'd need to see the actual figures from that press release. However, we can talk about what we would look for in such a report if we had it. Using the principles of how we analyze any company, when a company like Bally's reports its quarterly results, investors and analysts are looking for a few key things. First, revenue. Did they bring in more money this quarter compared to last year or the previous quarter? For a business like Bally's, factors like customer traffic, gaming win percentages, and non-gaming revenue from hotels and restaurants are crucial. If revenue is up, it generally means more people are spending money at their properties. Then we'd look at operating expenses. These are the costs of running the casinos, staff salaries, utilities, marketing, you name it. If revenue is growing faster than expenses, that's a good sign for profitability. Conversely, if expenses are creeping up faster than revenue, that can really eat into their profits. Another critical area is earnings before interest, taxes, depreciation, and amortization, or EBITDA. This is a common way to measure a company's operational performance before accounting for certain financial and non-cash items. For a company with significant physical assets like casinos, depreciation can be a big number, so EBITDA gives a clearer picture of the cash flow generated from their core business operations. We'd also want to see their net income, which is the bottom line, what's left after all expenses, interest, and taxes. Did they make money? How much? And then we'd compare these numbers to analyst expectations. If they beat expectations, the stock price often reacts positively. If they miss, well, you can guess what happens. It's also important to consider the competitive landscape. Bally's faces stiff competition not just from other traditional casinos, but also from the growing online gaming and sports betting markets. How are they positioning themselves in these evolving areas? Are they gaining market share or losing it? This filing, by referring to the press release, is essentially the company's updated statement on how they're navigating this competitive environment. If, for example, the press release indicated a significant drop in revenue, say a 15% decrease compared to the same quarter last year, and we know their competitor X saw a 5% increase, that would tell us Bally's might be losing ground. This could be due to various reasons. Perhaps their marketing isn't as effective or their properties aren't as appealing to current trends. Looking at potential risks, which are often detailed in other parts of SEC filings, we'd be thinking about economic downturns that affect consumer spending on entertainment, regulatory changes that could impact their gaming licenses, or even issues with their debt levels. Companies in the gaming industry often carry substantial debt due to the high capital costs of acquiring and renovating properties. The fact that this report is dated August 11th, 2025 and refers to the second quarter ending June 30th, 2025 means they are reporting on a historical period. The market will be assessing how well management executed the strategy they laid out in previous reports and whether they are on track to meet their annual targets. If we were to speculate about possible numbers, let's imagine the press release said their total revenue was, say, $500 million, up 5% from the previous year. That's a positive sign. But if their operating income has also jumped by 8%, their operating income might have actually decreased. Then you'd have to dig into why expenses increased so much. Was it inflation, a new marketing campaign that didn't pan out, or major repairs? Sometimes companies might highlight growth in new areas like online betting, even if their traditional casino revenue is flat. This shows strategic shifts. If Bally's, for instance, reported a significant jump in revenue from their digital segment, it could indicate that their investment in that area is starting to pay off, which would be a good sign for their future direction in a rapidly changing industry. Without the actual numbers here, it's hard to give specific commentary on Bally's performance, but the framework of this filing is that they are releasing their performance report card. What we would do if the press release were available is compare these numbers to their own past performance and to their competitors. Are they growing? Are they profitable? Are they managing their costs effectively? However, based on the structure of this 8K, it's clearly focused on delivering the latest financial results. It consolidates the information and makes it officially part of the public record. Item 202 is all about presenting these operational and financial results. The kicker is the disclaimer, which states the information is being furnished and will not be deemed filed for certain purposes, like Section 18 of the Exchange Act. This is standard practice for earnings releases when they're furnished as part of an 8K. It means the company is providing the information to the public, but they aren't taking on the same level of legal liability for it as they would for other parts of a filing that are explicitly filed. It's a subtle but important legal distinction. Now, looking at the overall strategy for a company like Bally's, they've been quite active in acquiring different properties and expanding their footprint. The key question is whether these acquisitions are truly adding value and boosting profitability, or if they're stretching the company too thin. The quarterly results would offer clues about this. Are the new venues contributing positively to the bottom line, or are they creating integration challenges and increasing costs without a proportional revenue increase? From a Warren Buffett style perspective, we'd want to see consistent profitability, a strong competitive advantage, and competent management. For Bally's, their competitive advantage lies in their branded casinos and now their expansion into digital gaming. Competent management would be evident in their ability to grow revenue faster than costs, manage debt wisely, and adapt to market changes. If the numbers in that press release showed strong revenue growth, but also ballooning debt and falling profits, that would be a red flag. It would suggest that while they are expanding, they aren't doing it profitably, which is a dangerous position to be in. Conversely, if they showed slower but steady growth in revenue and profits coupled with a manageable debt load, that would indicate a more disciplined and sustainable approach. While we don't have the exact figures from Bally's for the second quarter of 2025 right here, this filing tells us that their performance update is out. The real story is hidden within that press release, and understanding that story requires delving into the revenue, expenses, and profitability metrics. Alright, that wraps up our look at this Bally's Corporation 8K filing. What are your initial thoughts on what this kind of report signifies for the company? Let me know in the comments below. If you found this breakdown helpful, please give it a thumbs up. And remember to subscribe for more, and don't forget to join our Discord community for more in-depth discussions about these filings. Thanks for watching, and we'll see you in the next video.